Hi everyone. Sofi reported fiscal 2022 fourth quarter earnings results this morning, January 30th. The stock was up as much as double digits as a result of this report. So let's go through the critical figures and identify why the stock was up so much and whether that increase was justified. So starting with overall revenue growth of 60% in the fourth quarter to 456 million, a loss per share of 5 cents. This was improved from a loss per share of 15 cents in the fourth quarter of 2021. So this is really good news for investors as SoFi is starting to demonstrate that the revenue growth is going to lead to eventual profitability. I'll have more to say on that later on in this video, so stay tuned. The company added 480,000 members in the fourth quarter. It now boasts 5.2 total members, which was up 51% year over year. SoFi continues to benefit from industry-leading APY rates, right? Savings rates. When you put your money in a SoFi account, you earn the best rate you can earn right now out of, I think, any bank account, last I checked. And that's attracting direct deposit customers because that's a requirement to earn the rate. In order to earn that rate, you can't just park money with SoFi. You have to set up a direct deposit account. And direct deposit customers tend to be stickier because if in order to do direct deposit, you got to fill out all this paperwork with your job, and once you do that and you go to switch over to SoFi, you're going to be reluctant to switch over to another bank once inevitably these interest rates come down, right? The differences in these interest rates are when the Federal Reserve has increased overall interest rates in the economy, so SoFi is able to offer more attractive interest rates to its customers. But when interest rates overall in the economy come down, this advantage is going to be reduced for SoFi. It's no longer going to attract the kind of customers that it's attracting right now. And so I think management is prudently requiring customers set up direct deposit because they understand that eventually interest rates always fluctuate, and they don't want their customers that they're gaining right now to leave for another bank once interest rates come back down, right? Or they don't want to have that decrease in customer growth once interest rates come down. Uh, Here's a troubling trend I saw in SoFi's fourth quarter earnings report, and that is personal loan origination was up 50% in the fourth quarter, while student loan origination was down 84% and home loan origination was down 84%. So, home loans and student loans are significantly down. These are loans that, in my opinion, are more secure than personal loans. And the fact that a large degree of the loans that SoFi makes is personal loans, these typically come with no collateral and they're not protected under they can be written off under bankruptcy, right? Student loans, you can't write them off even if you file for bankruptcy. You're still going to owe those student loans. Now, there's a lot going on with student loans and the moratorium in the US. There's going to be more decided in the coming months regarding that. But home loans, those are down because interest rates are so high that people are no longer interested in refinancing their current rates, right? It's not going to be advantageous. And fewer people are filling out applications to buy new homes with new mortgages. So this is a headwind for SoFi. This is something that investors should look out for. Here is where I think the stock increased because of this final point I'm going to make here. Management is forecasting 35% revenue growth at the midpoint in Q1 and 27.5% for fiscal 23. But here's the key. Management is forecasting the company will reach profitability on the bottom line in the fourth quarter of 2023. Now, this isn't some fake profitability. This isn't like adjusted EBITDA profitability, right? A lot of growth companies like SoFi like to use adjusted EBITDA. EBITDA in itself is already an adjustment, and then to adjust the adjusted figure and claim that you're profitable on adjusted EBITDA. Meaningless figure if you ask me. But SoFi is saying they're going to reach GAAP, general accounting principles profitability, by the fourth quarter in 2023. I think that's what had the stock jumping after this announcement, was not just that the company's growing robustly on the top line, right? Anybody can grow revenue if you're willing to generate massive losses on the bottom line. But now that SoFi is saying they're going to reach profitability by Q4 2023, that was the big news. I think that's what had the stock popping. I think if you're a long-term SoFi stock investor, this is really good news for you. This is something you were looking for, the company reaching profitability by Q4 2023. You're starting to see evidence in economies and scale. This is really good news. This is why the stock was up. And in my opinion, this was a justified increase in the stock price because it's demonstrating profitability. SoFi had never had difficulty in demonstrating growth on the top line. Where I was skeptical about this company was its profitability, its profit prospects. But now that it's reaching that, I think that's great news for SoFi stock investors. All right, so that's all I've got for this SoFi stock earnings review. I'll go into deeper dives into SoFi's latest earnings report on future videos. This is my first look. Thank you for tuning in, and I'll see you next time. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.